Hey traders, Steve here from Jackrabbit Trader, and in this video I want to look at my portfolio for the week of August 10th, 2019. For those of you watching and are not a member of the Jackrabbit Club, please understand that you're getting this video 30 to 45 days after it's been released to members. So if you want to become a member of the Jackrabbit Club and unlock real-time video updates, please head on over to jackrabbittrader.com/membership and sign up today. I'll leave a link in the description box below. Also, if you're watching this on YouTube, please like, subscribe, and hit that bell notification if you enjoy the content. It helps the YouTube algorithm and it helps promote the video, so I would appreciate that very much. With that said, let's take a look at the portfolio, and we basically finished the week with a couple of small profits in CHD and DRI, which we'll get to in a few minutes. But first, and also we finished the week with some profits in trading a few put and call options in SPY. So we're going to look at those in a minute. The portfolio for the month of August is now up $2,476.67. You'll see there's some housekeeping items that we have to address here because we do have a good amount of losses, and we'll go over those as we go through the portfolio itself. But first, I want to take a look at the market and see where we stand. Right, we talk about these market cycles being the backbone of our trading system and our trading style here. So we've identified all of the green and red market cycles, which is really when the SPY is trading above or below the 21-day exponential moving average. And when we're above it, we want to be buying stocks, accumulating positions, putting risk on, adding to positions. And when we're below the 21-day, we want to then go into protection mode, play some defense, put some hedges on, take some profits, and we want to use those bounces in the market to initiate those positions or take some profits off the table. So back on the 31st of July, we've identified a red market cycle. So we've been in that red market cycle since the 31st of July, about 2 weeks now. And really the market pulled back late last week from the Fed announcement. And then Thursday, Friday continued lower. This week, gapped way down, all right, went sideways for 2 days, had a big bounce on Thursday, all right into the bottom side of the 21-day, closed above the 8-day. And then on Friday, we had pulled back, and are closing below the 8-day moving average. So what does that mean for us and for our portfolio? Well, really the market cycle still, is in play. We're still in a red market cycle. We want to be taking profits closer to the 21-day moving average, initiating, maybe some put protection on the remainder of the portfolio, and that's exactly what we did this week. We traded around. We came into the week with a few puts. We closed those puts out at the end of last week. And then we, of course, missed out on this nice big gap down. And, that's a whole nother story for a different day, I guess. But we're not looking to be perfect. We have no idea. Come Friday, we don't know that Monday is all of a sudden going to, have this big gap. We're looking at bouncing right off the 290 level. We're looking at, here it becoming support from previous areas. If you extend that 290 across, you could see that we hit it here as resistance, we hit it here as support. So taking profits into that 290 level is probably the right thing to do at that time. And you can't predict the future, right? We don't know that we're going to gap down. I think at one point, the market was down 100 or so points in the S&P. You don't know it. It doesn't pay to worry about it, right? So we can only trade with what we have in front of us. And came into Monday with a pretty much no protection at all, in half cash, 50% cash in the portfolio. And then what we did is we used this bounce on Monday to initiate some weekly call options just to see if we can get a bounce. We took a few profits out of that, and we discussed all these in the If we go over to the member area, we discussed these in our trade alerts for this week, and you'll see that I sent out, on the 6th, we were closing the calls that we had opened on the 5th, the 288 calls. And one of the things that I even said in that note was that I went out and tried to buy cheaper out of the money weekly call options because I wanted to limit my risk. Now, we again took a little profit out of those puts. I'm sorry, out of those calls. Getting confused. Out of those calls. Where are they? Here they are. All right, so we bought them at 165, sold them at 218, took $204 out, a 30% move. All right, and again, you don't know where we're going to go. So again, we couldn't predict that we were going to come down into this level. And in the same respect, I was taking those call positions off into this resistance level at 288, right, top of the gap. Sure enough, take those calls off, and the following day we gap way up, and those calls that we bought at 160 at one point were trading $6. It is what it is. You can't, again, concern yourself with it. You can only trade with what's in front of you. So looking at, again, our trade alerts for this week, we closed out those calls on the 6th, and then we started opening up some SPY puts at 285, closed the 285 puts on the 7th with a little gap down, and then opened again 287 puts on the 8th. That was a half a position that we opened, and then finished opening them on the 9th. And also at the same time that we were opening the remainder of the 287 puts, we were closing our DRI and CHD stock. So again, it's just a way that I go about managing my positions to make sure that I am, leaning one way or another in the market, but doing so carefully, right? Because in this market with the high volatility, and look at how wide, large these candles are getting, volatility on both sides of the market. So, you want to lean, but you want to do it gently and not be overly exposed in either direction. So from the puts that we put on last week that we took off, the small call position that we put on earlier in the week, 5th, took it off on the 6th, and then again put some puts on the 6th into the 7th. We took about $1,236 in profit off the table there. All right. And then if we look at what we took off with our CHD and DRI trades, that was another $412. So, last week or so, $1,648 just by some small positions and, not getting overly exposed and just following market direction. So that's where the portfolio or the previous trades stand. And again, they're all listed here. If you go into the members area, you'll see, clicking on that current portfolio, you'll be able to see that exact spreadsheet right there that I just went over. So, again, market cycle still remains 100% bearish, still following everything that we've kind of outlined, where we're below the 21-day. We want to use the 21-day as a guide. We want to play defense. And we did that this week in the market and in the portfolio, going out with a little bit more cash than we started the week on, and a put protection in the portfolio. And let's see if we get any kind of gap down early next week back into this gap that we have highlighted here. Obviously, I was feeling really good about myself around 1 o'clock when I sent that alert out. We pretty much put it on. And the market just went down $2-3, and all of a sudden those puts were profitable. Now not so much, but we're still inside this day, and let's see. I would look at the highs and lows of today's bar, Friday's bar, as a guide for where we may be headed. Right, take out the highs, probably come up to the 21-day. And then let's see, do we take 21-day out? If we take the 21-day out, all the puts are going off, coming off for a loss. And now we see if we can maintain over the 21-day. Or do we take out the lows? And if we take out the lows, then I want to be looking at taking half of my puts off around the 288 level, which is the resistance from these 3 bars. And if we, get down here, which again, who knows? Didn't seem like we could get down there in one day last time, but who knows? Down at the 282 level, then I would be looking to take the other half of those puts off. So that's how I want to handle the protection and the market cycle. And again, all that is outlined, in the members area, where we're at. Okay, you could always check this bearish, and when we talk about bearish, that's exactly what we're talking about, coming out with protection. All our trade alerts you can review, and obviously all the updated videos and message board that again, if you have any questions or comments, let me know and we'll add them to that. So that's where we stand. Market cycle, market recap, pretty brief. Doesn't really need to be much more involved than that. So let's look at our existing positions and see how they are holding up. I know for a fact we're going to be exiting E-Trade. That one just we lost from the beginning. So let's take a look at how we're going to do that. All right, so let's head on over to all accounts, charts. Boom. Nope, that's not what I wanted. Charts. There we go. So you'll see it's pretty funny, right? We look at the SPY a lot on the daily chart, but look at where we came right back up to yesterday. I didn't even realize that. And it's something that, we got to pay attention to, obviously, with the weekly chart. But we came right up to that 293.75, which was a resistance level here, and another resistance. If we remove this, another resistance level here, right? So we came right there this week. So, while we did gap down pretty far, does that mean that this pullback is over? I can't tell you that. I don't think anybody else can tell you that. I've seen these nice big open candles in the SPY, and then I've seen them fail. Look at here, right? If we zoom in, here's a big open candle in the SPY in a previous downtrend, and the next week it took out the highs and the lows. Okay, so not saying that we can't get back over that 293 level. But I just think that under the 21 day, I'd rather be short than long, or I'd rather be neutral than long. And that's the way we've positioned ourselves here. And, that's our shot. That's what we're taking. And who knows, right? Another open body candle here the following week, really just traded within it and then broke down. So just because you see an open body candle, it's not confirmed until you get a close back above those highs. And if we do, then so be it. All right. But our shot right now that we're taking is, we're thinking that there's more downside ahead because we're under the 21 day, market cycle's red, and that's how we position ourselves. So let's look at the actual trades in the portfolio and see how they're holding up. So we did take off CHD. Okay, we'll get to those first. So we took CHD off the table, and again, any particular reason, in my opinion, the stock outperformed the market this week. And when we're in these red market cycles, remember, number one goal is reduce risk, right? So we're outperforming the market. We have a couple $100 gain. And can it go higher? Absolutely. But what if the market drops next week, right? So we're in the mindset that we want to be taking profits. We want to be playing defense. So if we have profits, I'm going to take them. Okay. Now, if the market was green, if the market cycle was green, no. Would I be taking profits on this trade? Absolutely not. But it's a different situation, right? It's a different market cycle. You have to adapt to the market cycle or the market conditions. All right. So if this was a green market cycle, yes, I would say, hey, you know what? This looks like a good looking trade. Maybe we're going to break back over those highs around 78. Who knows? Maybe this sets up a new run. I don't know, right? But we're not. We're in a position where market's pulling back. I want to reduce risk because next week we could break down below 72.44, and all of a sudden the trade that had a couple $100 in it now is a couple $100 loser, and now we're out. All right, so That's the reason we took CHD off, and that's the reason we took DRI off. Oh, too many eyes. DRI. Again, nice bounce off 116. Maybe this gets it going back over 126. And you know what? If it does, it does. It's going to do it without me. That's not my style. I took the profits off the table. That's critical to me right now. Profits off the table. Hedge the portfolio. Wait for better opportunities when the market conditions are in our favor. All right. So that's one big thing that I think a lot of new traders don't really grasp. I know I didn't grasp it. I was always, in these situations, I'd be like, all right, what are we buying today? And it doesn't work that way, right? There's no trade alerts again this week for this reason. The conditions, in my opinion, are not beneficial. Could you go out there and put your money to work, having a great week next week because the market goes higher? Absolutely. And you look like a genius, right? You time the bottom, you look like a genius. Well, I don't care how we look. I want to put money on the table, right? And to me, this is not the time or the place to be adding risk. It's the time and place to be taking off. So Adobe, all right, pull back here in Adobe, and you can see we came back into this support area, all right, the 282 area, and it held, all right. So right in here, so what was previous resistance is now becoming support. So now let's see what happens. Does Adobe kind of rotate back up and over this 298 level? If it does, then maybe it heads to 312. If not, our stop is still in place at 270, and we're just going to let it work. All right, at this point, if Adobe comes back up and over and we're still in a red market cycle, what are we doing? Leave it in the comment section below. Let me know, what are we doing? All right, and I'll answer you. If Adobe breaks down below 270, all right, very simple. We're taking the trade off for a loss. But again, if we're in a red market cycle, Adobe starts moving higher, I want to know what we're doing. All right, and again, leave that in the comment section below and let me know. ADP, all right, really just trading sideways, had broken down below this 162 area. All right, and what I'm going to do here in ADP, because we're in a red market cycle, we're going to move our stop up. All right, we're going to manage risk by moving our stop up. So now, even though it hasn't broken out yet, out of this consolidation, if it breaks back below 162 and closes below 162, for me, it's time to get out of the trade, and let's wait for better conditions. All right. AME. All right. Again, really had a breakout a few weeks ago and hasn't really done much since. Still looking at that 81.85 area to hold, and let's see what happens. Again, just let this thing work. But if you get a gift where it's up, a few $100s, then we'll do the same as Adobe, whatever you guys say. Comcast. All right, look at this one. So again, we come right back down into the support, and this is why we're gonna do a video in depending on when you're watching this, I'm gonna have a video out about reasons I love the weekly chart, right? And what happens is it identifies these levels that ultimately are very difficult to see. I mean, obviously Comcast is a little bit easier here because we already have it in place, but it always amazes me that we come down to this level, we rally up, and we come down to this level and we rally up. All right, so one of the reasons I love the weekly chart is because it just signifies and identifies really key areas. And in my opinion right now, we got to see, as long as we stay over 42.20, which is this line, dotted line right here, and even over 41, we want to be in Comcast. And again, if it shows a nice profit, then maybe we'll just take it off the table. E-Trade. All right, E-Trade is one of the ones that has got to come off. All right, and it's got to come off because it's breaking our support level. So when we originally got in this trade, it had consolidated along this 44.86 level, broke out, and market conditions were green. Everything was looking great. I was thinking we wanted to try and get to 51 or maybe even 53.35. And then after that, I had pie in the sky, maybe we can get back to 66. All right. Ultimately, we broke back below 445. and now we're trading 42. So the one thing, and the way the old me would normally handle this, I would say, oh, well, you know what? Look at what's happening. It's bouncing right off this 41 level. Absolutely. All right, you can't deny that it isn't. But that's not how I sized my position. I sized my position to 44. That was my line in the sand. So, it's got to go. And if it rallies back, well, again, I can't predict the future. I can only do what I need to. So I'm going to be getting out of, and we're going to do it right now. I'm going to be getting out of E-Trade. So 129 shares. We're going to sell the market. All right. So this trade will execute on Monday morning. And it's going to be in all my accounts that you can see. So let's see what we got going on. 38, 18, 34, 16, and 23 cents. So selling 129 shares at the market come Monday morning, and that'll flatten us out of that E-Trade. Hilton, all right, just pulling back. Again, as long as it stays over 87, 88, I think we're in good shape. We could get aggressive depending on how we handle next week. Some with these open green candles, maybe we want to trail stops up in that. Similar to Adobe, maybe we'll trail stops up. But for right now, I'm comfortable with the amount of risk we have in play. To just let these guys kind of just churn around as long as they stay over our initial stop levels. I think we're in okay shape for now. But ultimately, that's the whole point, right? We're hedging because we want to let these work, because if the market turns around and rallies 80 points next week, we want some kind of long exposure, to keep us in the game and not get us shaken out. And here you look at Honeywell, okay? Now, again, similar to how we talked about the S&P, just one candle, one open hollow body candle doesn't mean that the low is in, all right? But now we can relate it to a specific support level, all right? So at one point during the week, Honeywell was trading down around 161, ultimately rallied back to get back over 164, and now, instead of taking it off for a loss, we're still in the trade, although we're losing some money. So the thing that you have to understand here is, again, you have these stops in place, and you need to just manage the positions. I could have freaked out and said, everything's going to shit. Sorry for my language, but whatever it is. But everything's going down Monday morning. Oh my God, world's collapsing. If you watch CNBC, who the hell knows what they're saying? And all of a sudden, everybody panics, right? Everybody panics. And we're not like that, right? This is not the way we trade. I don't turn the news on. Half the companies I own, I don't know what they do. And we look at charts. All right? We have a process. We have a system that we use, and we have to stick with it. All right? Because other than that, you could have the best system in the world, but if you don't follow it and manage it properly, human error and user error is going to dictate how successful that system is. So, we use weekly charts for a reason. We traded back over 164. We closed above it. So this week, Honeywell stays in the portfolio. Next week, I can't tell you. But again, we just want to make sure that we're keeping up with the system and staying true to what we believe in here. So actually, O'Reilly here, I didn't even see this one unless it rallied late in the day on Friday. It was up 1% on Friday. So this is one that we may want to look to take off. Okay, come Monday morning, and I'll send you an alert. If we can maybe get back up to this 73.59 level, I think we may just take the rest of it off. And see, where the market goes from there. It's a $4,000 position. We're up $164. So actually, you know what? Let's just put an order in. I'll show you guys how to do that real quick. So we're gonna do the same thing, right? We're gonna sell 60. We're gonna hit the sell market in Thinkorswim, but the difference here is we're gonna hit edit before we go ahead and do anything. And we're gonna sell 60 shares instead of at the market. We're gonna sell a limit with good till cancel. All right. So that basically is saying that until I cancel the order stands. Or unless it gets hit, obviously. And we're going to try and take O'Reilly off at, let's call it 73. What What do you want to call it? Let's call it 73.45. All right, just a little bit before. Confirm and send. And then for me, again, if you don't have 1,000 accounts that you're managing, you should be okay. So this is 21, I think that was. Nope, 22. 22, 10, 22, 10, 18, and 10. And this is 0. Oh, not go. 0. Not a 0. A 0. Let's go -10. Change it back to sell. So we're selling 60 at a limit, and what it's going to do is it's going to put an order in there. So now O'Reilly goes up, hits that number, we're out. All right, and then we take some profits off the table, and I'll keep an eye on it. If it looks like it's starting to reverse, I may just take it off, and again, I'll alert you if that changes. Looks like they have earnings. Let's see, when are earnings? Oh, they had earnings this week. Huh? See that? I don't even know when things have earnings half the time. Because it doesn't matter, right? For us, it's not a part of the process. So I don't even put them on the screen. Raytheon, again, as long as it stays over 173, we're good. I'm looking for maybe a move back to 207. But again, let's see how the market reacts with these market cycles. TSCO pulling back. Again, another opportunity. Maybe if we feel we're under a little bit more pressure to trail some stops to these lower candles, see if they can hold. But if not, 98.31 for now is our stop. And last but not least, UMP. And again, I love when a support level gets tested and tested and tested, and it just bounces off it, right? It just goes to show you that there's so many things that you can look at in the market. That you can look at MACD, you could look at RSI, you can look at moving averages, you could look at whatever you want to pick. But when you clear your chart off and you really just have simple lines in with I haven't even been using trend lines lately, in all honesty. I put them in there more for you guys, but I'm just looking for support levels to hold, and if they can hold, then great. So again, UMP, look, it's pretty amazing, right? Here we were last week, we came right up to this 179 level and we pulled back, right? And here we are this week, we came right down to support at 164 and we bounced. All right, so we're just kind of hanging out in the middle of this range, but it just amazes me that where stocks ultimately turn and how they perform within these support and resistance areas. So again, not really doing much this week. Again, we took off CHD and DRI for some profits. We're trading around SPY puts. Trying to protect our portfolio. We're going to be taking E-Trade off the table for a loss this week. We set an order in to O'Reilly to, we get a little bit more strength in O'Reilly. We want to take it off and, move on and take that little profit. So I'll probably send just a quick little recap in a email. But again, I hope you guys enjoy the video. Remember, if you're watching this on YouTube, please subscribe, like, and hit the bell notification. It really helps me out with YouTube. And I want to know what we're doing with Adobe. All right, leave it in the comments section below. All right, other than that, have a great week, and we'll talk to you next week. Take care, guys.